For more now, we're speaking with Charles Chaw, Director of Knowledge Consulting. He joins us now in our Singapore studios. There was an ecstatic reception, Charles, for the Hong Kong listing of Bank of China. Will it have the same kind of reception today?
It's definitely going to be a frenzy day in the Shanghai Stock Exchange. You know, when the first day of trading in Hong Kong for Bank of China, the trading volume was huge. Even till today, after weeks of trading, it's still as hot. Imagine today is, yesterday it closed at 3.675. It's a new high. And the IPO price for the Bank of China in Shanghai Stock Exchange is 3.08. And we see the gap there, and it's going to move up. And I don't see any reason the shares will come down today. It's going to be up and up.
Up and up and up. What about the other companies that are planning to list? Will they have the same kind of reception since China lifted its ban on IPO listings?
Bank of China is a prelude to me that the more of these big companies that are already listed in Hong Kong to have a dual listing in the Shanghai Stock Exchange. I see more to come, and this is a natural move because having it first listed in Hong Kong Stock Exchange has its advantages. First of all, Hong Kong is a more mature market, and the political issues, Hong Kong is well taken care by the central government. There are lots of money to be making IPOs for the public, for the institutional, for professionals in Hong Kong. And I think it's about time that some of these big IPO has to have at least a dual listing in the Shanghai Stock Exchange.
But the big question is, Charles, will domestic and retail investors support the stock, or will it be supported by the Chinese government and institutions?
There are too much hot money in China today. And 1.6 trillion US dollars of savings. Imagine that, to buy these stocks.
It's all pent-up demand, wanting to invest in the equity markets.
This is a huge IPO, 33 times oversubscribed. Even the more to come, I think the market is able to digest that.
And going forward, who do you think will be the next company that would list after Bank of China?
I mean, they are already announced, for example, the Shanghai Automotive, SAIC, of course, the CNOOC, the oil companies, and more banks would definitely be listed in Shanghai Stock Exchange.
But will they have the same kind of fundamentals and the same kind of support?
I think what investors should look at is once the financial institutions and the oil companies have its listed listing status in the Shanghai Stock Exchange, they are state-owned companies. More to come. Now the concern is are these companies going to be listed in Hong Kong first and then back to Shanghai? I think personally it may not happen because I think there are too much of special preference treatments to the Hong Kong Stock Exchange. I think more should flow back to the Shanghai Stock Exchange. Too much money in Shanghai, in China.
But as you say, it is a concern. Do you think that people are only investing in the Bank of China because it was already listed in the Hong Kong Stock Exchange? And if other companies list on the Shanghai Stock Exchange, will it gather the same kind of response in China even before it is listed overseas?
I think besides the hot money, as we know, the Shanghai and the Shenzhen IPO market has been closed for almost a year. And 2 weeks ago, we see a listing of an engineering company. It was oversubscribed, first day trading, pump, it has to stop because too hot, too much money trading, chasing the stocks. And the market definitely can digest it. And I think the mainland Chinese are expecting more to happen in Shanghai or Shenzhen.
You speak of mainland Chinese investors. A lot of people were complaining when the BOC listed in Hong Kong that there was just 5% allocated to retail investors. Do you think that now that it is listed in China and more Chinese companies will be listing on the mainland, we will see more people, the common man, gaining access to these red-hot companies?
I mean, one is listed in the market, is open to public, whether you are institutional or it's just man on the street, you can buy the stocks. And I think in the case of Shanghai Stock Exchange, of course, there are bigger allocations for the public as A shares. Even institution has to buy into A shares.
All right, Charles Chaw, Director of China Knowledge Consulting. We'll wait and see how BOC fares when it opens in about 2 hours' time. Thank you so much for joining us.